My thought is there is a lot of room for stimulus. My question is, why haven't they done it? They had a perfect excuse for zero COVID to quell that frustration, that long-term. I mean, think of how long Shanghai was locked down. They didn't do it. It's politics over economics. It's control over the wealth. Well, I think control over everything, right? And they don't want to be forced into a position. They also don't want to be seen. Correct me if I'm wrong, Kyle. And this is all. You can see this with the vaccine approach. I don't think they want to be seen doing what the rest of the world is. She's made this what's gone on with COVID. We do it better. We do everything better. Stick with the CCP. And I think that stimulus. And finally, I go back to this point about foreign investors. Why did they single out foreign investors to rediscover their animal spirits? Why? That made no sense to me. And you got to link it, I think.
Well, it makes perfect sense, Nicholas. So look, again, I'm going to go back to the way that the Chinese Communist Party works is they take their weakness and they try to turn it into strengths in their propaganda machine. So when you look at, Jack, I don't know if you read the IMF Article 4 reviews on IMF member countries that are done annually, but back in 2019, the IMF has something that they call reserve adequacy. When you look at reserve adequacy, it takes into account the size of your economy, the size of your imports, your exports, and it takes into account your short-term debt, your medium-term debt, your long-term debt. What the IMF reserve adequacy formulary is an attempt to determine is the way you think about it is it's the working capital needs of a sovereign, okay? Because if you're a sovereign that's doing tons of importing and exporting and you need dollars running your economy, because again, the Chinese economy, it faces the rest of the world, 86% of their settlements are in dollars. So they need desperately dollars to deal with the rest of the world. They import their food every day. They import their energy every day. They import basic materials, base metals every day. So dollars are very important. So in 2019, the reserve adequacy formulary just disappears from the Chinese Article 4 review and the Hong Kong Article 4 review. No longer comes up.
That's right. We were looking for Hong Kong at that time.
Gone, right? It's gone.
Yeah.
That's super interesting in its own right. But when you think about this, that number, a working capital number, if your revenues are moving up as a company, your working capital number has to move up, okay? If you're an import exporter and global player. So the reserve adequacy formulary output number has certainly needed to move higher over time. Now, what you see with China is they now own less than $1 trillion of treasuries. They say they have $3 trillion of dollar reserves, and they promised when they ascended into the IMF SDR, they promised within 2 years that they would fully disclose the composition of their reserves. Haven't done it yet. Now, my view is think back to 1998. 1998, we had already on July 2nd of 97 is the day the Thai baht broke. Was it just a curious coincidence that it broke the day after the British handed Hong Kong back to the Chinese? It wasn't. Money was running from Southeast Asia. The very next day, the Thai baht broke. Then you had the Asian financial crisis begin kind of en masse in 97. In 98, you had the Russian default. You had EMs blowing up because the dollar was really increasing in value. I mean, I know it rhymes a lot with what we're seeing now. But in 98, you remember Larry Summers was a Treasury Secretary. One day, Larry gets a call. The call comes in and it's the finance minister of Korea. And now Korea in 98 was the 800-pound gorilla in Asia. They had the most dollar reserves of anyone in Asia. They were solid. They were rock solid. It was the peripheral Southeast Asian economies that were falling like flies. We didn't worry about South Korea because they had a mountain of reserves. So the finance minister calls Larry and says, "Hey, Larry, we have a problem." Larry says, "Well, I've got a lot of problems. What could your problem be? Everything looks fine." And the finance minister said to Larry, said, "You know what? We're kind of out of dollars." And Larry says a couple of expletives and says, "What do you mean?" And they said, "Well, we show this pile of reserves, but we've lent those to our banks. Our banks have sold them to defend the Korean won. And so we technically don't have them anymore. We really need a big dollar loan." So the reason I bring that up is You look at China, you look at their diminution of reserves, their lack of ownership of treasuries. They want to make it sound like it's weaponized and that China's going to hurt us by selling treasuries, but it is their weakness. They are in a desperate need for dollars. Their current account was headed towards zero. Now, let me make one more connection that maybe needs to be made. When you look at their current account and you look at their capital account and you look at what was happening prior to COVID, it was collapsing down below zero. You know why? Because oil prices were high and the Chinese population kind of writ large, what do they do when they get a little bit of money? The first thing they do is they get on an airplane and they leave. And they send their kids to university. There were 440,000 Chinese kids in US universities in 2019. 440,000. And they pay their bills in cash. So you look at
It's not Chinese America, this is Chinese.
These are Chinese nationals in US universities.
Yeah.
So if you look at the number, they were spending, China Inc. was spending $400 billion a year in dollars, money. When the Chinese travel to Europe, they travel to Asia, they travel to the US, they can't spend RMB because no one takes it, right? They still have a closed capital account. So they spend dollars, euros, yen, pounds, but it's mostly dollars. So those dollars were leaving the system in mass. And what they were doing to offset that is corrupting MSCI and Bloomberg, trying to get those passive pipes put in for dollars to be called
Hong Kong, Shanghai Connect.
Hong Kong, Shanghai Connect, but also the inclusion in the MSCI indices and as the Bloomberg Lehman indices are very important. So it's my view, again, this is going to sound hyper-conspiratorial, but it's my view that you had this scenario where China was reaching the end of its rope. Their current account was going negative. There were more Chinese people than ever flying all over the world and spending all over the world. And at the exact same time, the Hong Kong protests were at their zenith at the end of 2019. And what happened? Magically, a disease, a virus showed up in the perfect time to save their current account and to allow them to move into Hong Kong without tanks and guns. It happened perfect.